Let's talk about something that I have in build that I'm going to try to get it in TradingView. I'll start off talking about it here on NinjaTrader 8 because I know I can build it in NinjaTrader 8. It's easy actually because we can have tick data, but I do have some encouraging information as to feedback that's coming from the TradingView platform group as it pertains to their desktop version. So what I want to do, and I know I can do it in NT8. I've had this tool in NT8 before, but in recent couple of weeks I found I guess you could say a better formula for measuring what I'm going to show you. And now that I have that, and I have a rough draft version of it, now I really want to kind of wrap the whole project up to have it in NT8 for my own use for some very targeted linear automated price movements. But I really want to get it in TradingView so I can have Claude AI look at it and help me find some of these patterns in a more specific way. So let's talk about this. So a lot of traders do a great job using order flow. That's one way of looking at what's going on intrabar. There's another way you can look at it where you're not at all paying attention to the bid-ask differential, cumulative delta, or order flow with the bubbles. What are they called? Heat map or book map or jigsaw or any of those. You can use that stuff. And now deep charts, the guys that deploy deep charts, or volumetrica, and deep charts kind of, I guess, one's maybe the parent company and one's the charting side or something like that. All that's fine. That stuff, though, in the end, doesn't do anything for me to find what I'm looking for and what I'm going to talk about right now. And I've been getting some questions about this. Instead of continuing to answer it, I was thinking, I'm just going to make a video. Then if somebody has a question, I'll send them this video and it should make sense. So let's blow up the charting here first so I can really explain it. Then I'll go show you some of the same type of setup, but on the TradingView chart. So NT8, I can do it 100%. TradingView, I can do it about 80%, possibly soon 100%. So let's cover it real quick. So I expanded this chart a bit, and what I'm doing is on a symmetrical Renko only, not regular Renkos. It doesn't work as good. Symmetrical Renkos are perfect for this. Let's take a reversal and then talk about the intrabar price resistance and how that I'm basically building it into an indicator, from an indicator that just gives me like raw data to an indicator that actually changes the color of the price bars according to resistance or lack thereof for up and down price movements, where high linear price momentum starts to accelerate. So let me expand this even a little bit more, and then we're going to dive in so I can kind of explain this. So what I'm talking about is I'm trying to look at inside of each bar from the beginning of the bar formation to the close of the bar formation, and I'm not looking at order flow. I'm measuring the resistance to price moving up versus resistance to price moving down. Resistance or lack thereof down, resistance or lack thereof up. What I'm finding is there's some harmonics, the new way that I found of measuring this. So the raw data is sketchy, but I found if I look at the raw data with a certain skew, almost like, getting the right magnifier glass to look at the data, now the data means something. Now I can see what it means. So in this case, I have the trend bias indicator and an upward trend. If I'm getting pullbacks and then lift, and if the first couple of candles in a row are showing me that there's the bias of the up movements of price, not order flow, but the movements. You know how the bar's ticking up and down by each candle, you see it ticking up and down, ticking up and down, ticking up and down. And then the next one forms, ticking up and down. It's going up and down, up and down, up and down. Well, there's a bias to that. So as price is ticking up and down intrabar, there are times when the price basically forms, the candle forms, it closes, and then the next candle forms, and it closes real quick, and then the next one, that there's some harmonics in there where the movements of price at the sub-second level, not order flow, just movements of price, every little up and down movement of price, intrabar, has a bias or a ratio to it. And when it gets to a certain level of ratio to the upside, I'm noticing price has a high expectation of follow through afterwards. And I don't need it to move 40 points. Heck, if it moves 10 points, that's great. 7, 8, 9 points, I can get my stop almost to break even plus. I think like 7.5 points on one time frame. I only need from the instant I'm seeing that harmonics or that pattern, and I jump in. So let's say I see the harmonics, and they almost always happen after little reversals, whether they're structural reversals where the market was going down and then goes up, or the market's going up and I'm getting pullbacks in an uptrend or kickbacks in a downtrend. So in this case, I had a bit of a micro reversal, then lift, and then let's say right here I have a lack of resistance to upward price movement. So in other words, as far as the order flow side goes, as buyers are coming in, there's nobody loading up the book with sell orders resisting their buying activity. So there's a lack of resistance to it. And when that happens, in other words, the sell orders are getting moved out of the way, it creates very linear price movements, high momentum, beautiful follow through. The key is follow through. So if I get into the trade, I see the harmonics, and I'm going to tell you how I'm making the candlestick to see the harmonics. And let's say I get into a trade, stop is here. As price is running, I'm chasing the stop, and it's running and running, and eventually I get blipped out right here. But hey, I just caught a nice move. And then building the tool, getting it in something like TradingView, connecting it to Claude AI, I might find out that, okay, phase one, as it runs, I get the stop to break even plus. Then I can go into a phase two where maybe the stop is connected to my indicator. So I have a little bit of breathing room, and then it might really run. Or, however, there's all kinds of possibilities there with the trail stop. After the first part of the mission is to get the stop to break even plus, so I'm in a free trade. So that harmonics is there to be measured, and it's easy to see it. So what I want to do then is change the color of the bar. So my initial thoughts are I'm going to go with 5 color shades. So if we have a reversal, let's say these were all bright red, a couple of them are bright red, some were not as bright of red, but to have 5 colors. One color would be a neutral color like gray. If that lack of resistance to upside price movement was moderate, this at the very bar close, as it read all that data intra-bar, the second the nanosecond that the bar closes, whatever the final ratio was or bias, then the bar would be colored accordingly. So if it was really strong, meaning there's a complete lack of resistance to buyers, this candle would be bright green. And then let's say it happens again, another bright green, and then another bright green. And through optimization, I'll find out, hey, maybe I need 3 or 4 green bars in a row. Then I jump in, stop. I'm in the trade. It runs. Stop runs. I'm at break even plus. Then I go to a second tier stop, whatever the case may be, and it runs and takes off. You only need a couple of little hits a day. You only need a couple of little hits a day to quick scalp, fully automated. This is stuff you're going to be doing fully automated. You're not going to be hand trading this stuff. I mean, you could, but this is my mindset is to trade this fully automated. Grabbing linear price movements that give the harmonics right away that lend to a high probability of if I detect the harmonics, then I have a high probability of an extended follow-through move. And I'm sure this is happening when institutionals are coming in, and it's known that institutionals are coming in. So if some smarter participants in the market see institutionals getting in, why would they want to go sell right there? At least as a new directional trade. They might be selling to cover out of positions that were long from lower levels, but I'm talking about the kind of selling that would hinder or resist price movement. Typically, I'm talking about newly initiated. So when there's a complete lack of resistance to upward price movement, each bar close, if it met that benchmark level of bias or beyond, the candles would be bright green. If there's moderate upside, there's some resistance to the upside movement to price, this would be a kind of a darker shade of green, not as bright. So it'd be green, but noticeably not like bright green. If it's about 50-50, the candles would be like a grayish color. If the candles have no resistance at all to downward price movement, just the opposite of upward, they'd be bright red. If there was a little bit of resistance, maybe a couple candles, there's a little bit of resistance to downside price movement, they'd be a darker shade of red, one that's obviously not as bright